my take is that it's just really confusing. I think right now that oil prices will continue to grind higher no matter what's happening, like today or tomorrow. But I do believe they will. I mean, there's a lot of things that have changed, and one of the things that has changed is that we've seen a lot of compliance so far from production cuts or production stalls from OPEC. That's been good. A lot of nuances with the shale market here in the U.S., but I do believe we're going to stay in this tight and narrow range. It's a volatile range, but I still maintain that we're going to see closer to $60 a barrel in WTI towards the end of the year. It sounds like a boring market compared to where it's been over the past two, but it seems to be the case right now.
That said, we were speaking with Paul LaMonica from CNN a little earlier, touching on the fact that Exxon's performance of late not so hot. The same for the likes of BP and also ConocoPhillips. So some of these major oil players really not sitting so pretty as we head into 2017, despite Donald Trump's renewed efforts within that space.
Yeah, it's funny. There's a growing chasm between expectations and reality, and that chasm is growing more every day. And it seems like in some sectors of the market, they're giving the Trump-Ryan agenda a lot of slack, and others they're not. And that being said, I still maintain that within the U.S., the energy sector, perhaps next to the banking sector, is one of the few sectors that I really would like to own. I think it's one of those where we are now positively correlated to a rise in oil prices, and that was not the case 2 years ago. And I think, relatively speaking to the rest of the market, energy stocks still continue to languish fairly cheaply in valuations. Again, that's relative to the rest of the market.
Certainly, this upward momentum not only being seen within this space, but also when it comes to iron ore. We've seen a jump in the spot price. I know this is a move also that you're watching closely. Just give us a guide in terms of some of the factors and some of the drivers behind it.
Yeah, absolutely. It's hard to believe. Up 18% year to date. We had that stunning $5 move. Up over, $90 a ton for the first time since 2014. Everybody is scratching their head, and there's a lot of pedestrian commentary out there on why, and I don't think anybody really knows why, because when you look at the port situation before the Chinese holiday, the news was quite different, that we were overstocked, oversupplied, and iron ore should go down in price, and that clearly has not happened. One thing I do need to mention, and this is true for most metals, not all, but most metals, is that we have witnessed a pretty significant industrial turnaround, especially in the third and fourth quarter of 2016. We're just starting to see those numbers now. I think those growth numbers are about to peak. That's not to say that iron ore is going to go terrifically lower, but I think there is a ceiling in place. China continues to be the story, and we know last night that the CPI and especially the PPI came out hotter than expected. We just have to face facts. This is a growth story, and with all the Twitter blizzards that we hear and all the fake news and real news, it's hard to cut through the clutter. But the fact is, we're seeing growth, real growth, not phenomenal, but enough to have a good rebound in the metals markets.
So, Larry, let's take a step back and look at sort of some of the broader market action that we are seeing today. The Wall Street indexes, each sitting at record highs, really some significant upward momentum there. A lot of that coming through, as you flagged, from the financial space, performing relatively well, particularly off the back of those comments from U.S. Fed Chair Janet Yellen. Indicators suggesting that March really is that live meeting that we did have Harker suggest a week or so ago. Just give us your take, Larry, on today's trade.
Oh, today's trade, I think, is just more relief over the FOMC. She really didn't iterate anything out of the ordinary and nothing really new. And that's, people are expecting or hoping for the same when the ECB speaks. But, yeah, we're seeing outperformance of the financial sector. Do keep in mind that that trade basically unwound itself a little bit over the past few weeks relative to the rest of the market. So there's been a good bounce back with that. That said, no news is good news. The market, right now, the psychology just seems to be different today, where there is that reality versus expectation. the S&P crosses through that 2,300 line without any kind of pullback, and now people are back to chasing and about to, just being discouraged of not being in the market.
Well, that sort of ties into my next question. I wanted to ask sort of the psychology, the sentiment among those traders on the floor at the moment, and in the face of this huge upward momentum that we are seeing in the face of such uncertainty.
Yeah, that's a great question because it's very multifaceted. I mean, there is that reality expectation gap. There's a lot of people giving Trump-Ryan the benefit of the doubt that something will take place this year. Tax cuts, deregulation. We'll find out a lot more by February the 28th. But beyond all that, a lot of people are missing the fact that we have witnessed a fairly good period of growth momentum, which started before the election. When you think corporate profits are up, business capital expenditures are up. I mean, I haven't said that in 7 years. It's amazing. PMIs around the world are up. Business confidence is up. Now, I mean, it's not all good news. I mean, we don't know what's going to happen to valuations if CAPEX continues to go higher or if consumer inflation goes up, what's going to happen. But for now, we're seeing some growth momentum, and it seems to be overshadowed by the daily amount of Twitter feed that we're reading, or some people read, and not realizing that this is not all about Trump. This is actually a growth momentum rally that we're witnessing.